GM. GM. So I'm going to close my Unibot. That's the first thing. And swap it back into Ethereum. Reason being is this nice 5-month reaccumulation range was broken out above and has now closed back inside. So the real breakout point was above this level. We broke out, got above it. We've now had 1, 2. We're working on a third daily, which is back below it. And when you come back inside this area, again, I don't know where the market's going to go, but with that weakness that it's shown, it's more likely to now end up drifting back into this area and just spending more time there. So it's more the opportunity cost rather than the price element. If it was going to keep trending up, I wouldn't expect it to be back down here so soon. You can also see this level here, which was the last little peak before it broke down. It's showing weakness on all those time frames. So for me, the risk of holding it for several months through just choppy downwards grinding shit is higher. And so I just swap it back into ETH. It's quite simple for me. So that's what I'm going to be doing with Unibot. And then I'm back to just Bitcoin, ETH, Solana, AKT. They're all I'm holding and accumulating on spot. And then as for trades are different. So daily levels covers my views on what you do with spot, right? You buy stuff that's in a strong uptrend, that's having a pullback, that's setting up a good area for you to add to your spot bags, right? So bought Bitcoin from 16 or 17, 20, 20, 23, 24, bought some even at 30, bought some more at 26. So all the Bitcoin buys are from lower, and I want to add now on pullbacks in an uptrend. Choosing to do Ethereum, as I said, because ETH BTC I think is still set up better. Solana as well, because everybody wants Solana at 125, nobody wants it at 80. Covered that in daily levels. Cash, I bought at 55 cents. This is the first time I've stepped back in to buy more. I'll buy some here at 230. I'll buy more at 2 if I get it. Buy more even at 150 if I get it. But then as for trading, right? Trading's different. If you're actually going to trade on the long side, you want to see capitulation. So for capitulation, it needs to look different. I'll show a couple of examples, but you can see here an example of capitulation on Solana back in 2020 was a big red day. And if you use say as an example, we don't really see that yet. So like if you wanted to buy say spot here, that's probably an alright time, an alright price. I think it's probably going to end up having more downside to come sideways and then go higher. But if you buy spot there, you're going to eventually end up back in profit if you're right about being in a bull market. But if you want to take a trade, you want to wait for a big red candle. So if you see let's just say today's candle capitulates all the way down to here, that's when you can look at your lower time frame trades where it'll pop down, go sideways. You'll have a strong reaction bounce that'll eventually get sold into. And the long trade to take is around that area. But for that, you want to see a deep flush. You want to see a last real, like a big red candle on whatever coin it is you're looking at. Like stuff that comes, I'll use Solana again as example. So buying some spot here for me is a good play. But to actually get long on top of it, so to open a perpetual futures long, which is not trying to hold it for 6 months, 12 months, it's just trying to play a bounce. You want to see much deeper capitulation. A simple way of looking at it is it needs to go much lower than you would even expect. So let's just say Solana went like that. You saw this big fucking red candle all the way back down. At that point, you then have a target where you could get long back into that area, even just back into that 80. And you trade it from kind of 66, 67, 68 up into that 80 area. If it goes higher, sure, maybe. But you're only trying to take a long trade to capture a bounce. For there to be a decent bounce, you want to see a nice inefficiency forming. There's not really a big inefficiency forming on Solana here. It's just starting to potentially lose this support. And so like getting long here for it to bounce to there and back, it's not really worth it. So there is a definite a difference of opinion, or a difference of approach, I should say, that you need to take with your long trades, your few days hold or holding for, whatever, around a week. For that, you need to see some kind of real capitulation. That's going to be where you want to look for. That is on Coinalyze. You probably want to see some kind of bigger leverage wipe. So put on your aggregated liquidations and your global liquidations and see some type of bigger move down. So liquidations for Bitcoin, liquidations for altcoins. Zoom out to your daily and just compare some of the moves we've had. Right? No mass liquidations here on Bitcoin really yet. Haven't seen much of a spike, even though price is going down. So this is pretty steady selling. This is probably mostly spot led. You see that with the altcoins as well. We had a big flush out in the start of January. Everything here has just been kind of consistent. You'd want to see something approximating like, if you see a spike of liquidations to this level or longer or higher, like there or more, that's probably a better time to step in. I don't see signs of mass panic, liquidation, capitulation on altcoins just yet. So for those type of moves, you really need to be patient if you're trying to catch those liquidation events that can give you a nice reactionary bounce afterwards. If you go back to August and you look at the capitulation we had a huge liquidation day. You can obviously see like massive liquidations on both Bitcoin and on alts. And what that formed was, it formed a sideways correction and then a bounce up, right? So the mass liquidations, you buy after the liquidations, you get a bounce, you scale out on the bounce. It's very unlikely for that to reverse and go to new highs right away. It's much more likely, like I said, to set up some kind of trading range. With Bitcoin, it could flush to that 34.9 pivot level that I had marked. If you were to see something like that happen, that's an obvious time for big fear, big panic, big liquidations, price to find a floor, strong rally up just to squeeze, and then it bleeds back down. And then it forms a trading range before eventually going higher. So as a trader, your goal will be to trade the long side of that and approach it that way. But if you're an investor or you're buying spot bags, you just want to buy significant corrections. If you're going to trade, you have to focus on the timing aspect. The timing aspect is going to be best done when price reaches key support and capitulates into key support. Bitcoin is sort of in the middle of nowhere here because 40k was key support. We're losing that. I don't see a key support till 35. And so unless you see a big red candle with loads of liquidations, the trading wise, taking longs, I think you're catching a knife. Catching knives means, you don't want to catch a falling knife. It's dangerous, right? But the catching knives only applies to trades. So the real emphasis I need to make here is there's two very clear different approaches. One of them is it's okay to buy blood and buy scary red candles and buy when it's going down in an uptrend, right? You don't buy on the way down if it's in a downtrend. But if it's in an uptrend, like we're in here, and you're waiting for a higher low to form, you can buy on the way down because you're not buying the top. You're willing to hold it for weeks or months, and you have confidence it'll go higher. Right? That's a spot approach. But for longs, buying into this now, once it's lost, and otherwise then you want to look at your key areas. So total market cap is currently around that key support. It's still at support, right? This is support. This has been support. Even as bad as it looks, it's still support for now. I would still lean towards this probably breaking. Wouldn't be surprised if there's a bounce in between, a small bounce, and then eventually it kind of drifts or bleeds lower. Total 2, including Ethereum, again, is just at support. So you can see how bad sentiment is even when price is coming back into areas where it historically has been at support. Total 3, exact same thing. It's right into previous support levels, right? All of this. And like I drew out the other day for total 3, when price was up here, I said, here's probably not a great place to buy, but you can go all the way to 2021 lows and still be bullish. And so as you look at this recovery phase, which we're still in, nothing has changed except what? A couple of red candles. But I look at this and I think, well, now your downside could be as little as 8% if it goes back to the 2021 lows, back to that key